Well, when we last left off yesterday, there was a bit of a recovery which was happening in global markets. We did notice that happening on Monday. Well, that has been carried forward to Tuesday. So we did see a larger and a broader recovery across global markets on Tuesday. And when we're looking at how the Dow gained, it was up around 1.34%. In trade yesterday. The S&P 500 was up over 2%, and the tech heavy Nasdaq was up 2.76% in trade. So good gains or good recovery for all three US indices when we're looking at it on Tuesday. And there was some commentary coming out from the Fed as well to talk about. One, the Fed chair said that the central bank will not hesitate to keep raising rates till inflation comes back to normalized levels. The other thing that he also said is that they will not hesitate to move towards neutral to curb inflation. So inflation is going to be the key focal point for the Federal Reserve going forward. It was the clear commentary coming out from the US Fed chair yesterday. Moving quickly on to how Europe looked, the recovery trade in Europe was also playing out well. Mind you, Europe was in the green even on Monday. So the DAX was up around 1.6%, the FTSE was up around 0.75%, the Stock 600 too was up 1.2%. So good recovery seen even in European markets. The handover to Asia was largely positive, and that's what we're seeing at the moment. In fact, the Nikkei, the ASX 200 and the Kospi, all three are in the green, but it's a more tempered green than what was anticipated or what we saw in global markets. So there seems to be some little bit of a negativity which is starting to set in. The Nikkei is around 2/3% higher, the ASX 200 is up around 1% or so, and the Kospi is up around 15 bips, so flattish in trade. The Chinese indices though are lower. The Shanghai is down around 0.5%, and the Hang Seng is down around 2/3% as we speak. The SGX Nifty too is under a tad bit of pressure. It's down, it's broadly flat but with a negative bias. It's down around 15 bips, around 25 points lower, just below that 16,250 mark as we speak. So definitely some amount of negativity even for Indian indices that has been set in. In terms of US futures as well, and this will be the important data point to pick up, the Dow futures are absolutely flat, in fact trading with a negative bias, down around 0.1%. So definitely some amount of pressure building up after that little bit of a relief rally that came in on Tuesday for global indices. Moving quickly on to commodities, oil prices shot up quite dramatically. In fact, it was at $114+ in early trade even today, but that's come off. It's come to the $113 a barrel mark, and that was largely on the back of unwinding of lockdowns happening in China and anticipation around that. But there seems to be some supply positivity coming through as Venezuelan supply starts to hit markets. At least that's the perception at the moment, which is why oil prices have retreated back to that $113 a barrel mark. Talking about gold, well, largely the Fed commentary was concentrated around hiking rates, and that meant that gold continues to be under pressure. Gold is coming down towards that $1,800 an ounce mark as we speak. And bond yields, of course, positive impact on bond yields, largely on the back again of that Fed commentary. So bond yields are closing in on that 3% mark again. They're at around the 2.97% mark is where the 10-year bond yield is at. Cryptos continue to be under pressure. That's largely been the theme of the last month or so, and that continues to be the case with Bitcoin around that $30,000 mark, still under pressure, not able to breach that point at all as we speak.